So what are those Russian fossil fuel export revenues up to again? Ladies and gentlemen, we have high oil prices. They've been high roughly since the end of February and the beginning of March. I'd like to send my regards to the White House with that, however. Let's take a look, given that the St. Petersburg Economic Forum is taking place, at how the Russian economy is actually doing and how those Russian oil and fossil fuel revenues are faring. Because even though there was quite a big fear here that this would help the Russians in an extreme way, it's not that it doesn't help them, it still helps them a lot. But there are some things that are good to mention and good to point out, because in the end, Russia's profits aren't actually that amazing. So today we'll discuss how much the increased oil prices have helped or haven't helped Russia, why it didn't help them as much as we feared it might. And we'll also look at other economic indicators. But let's start with the oil prices. At the beginning, it's important to mention a few things that really work against high oil prices, helping the Russians much, or anything that reduces what Russia can gain from those high oil prices. The first point is that the ruble is a very valuable currency at the moment. This graph shows the ruble's exchange rate has risen significantly. For 100 rubles, you can currently get about 28 crowns, whereas not long ago it was just under 25 crowns, so the ruble has strengthened. A strengthening ruble is a very negative thing if you want to make money from oil exports, because when you have a strong ruble, the moment you sell a barrel of oil, you get a certain amount of dollars for that barrel, and for those dollars, you get a certain amount of rubles. And at the moment when the ruble is strong, you can buy fewer rubles for a certain amount of dollars than you could if the ruble were weak, so you don't get as much revenue into the state treasury through the taxation of those oil companies as you could. Therefore, a strong ruble significantly reduced the revenues of the Russian state treasury, the Russian state budget, from oil exports. Another point that takes a small bite out of oil profits is the fact that Russia pays oil refineries billions in compensation, which reduces revenues. Yes, by doing this, they are reducing their revenues from oil exports and oil product exports, because when you have capped oil prices in Russia and some refineries that still operate on market principles, those refineries could easily sell their products abroad and make huge money from it, because abroad they can sell them for much higher prices than they can in Russia, where fuel prices are capped so that Russians have cheap fuel and can live comfortably. And when fuel prices and gasoline prices rise, as the Russian state, you have to pay those oil companies much more money, because you are basically compensating them for much bigger losses than when fuel prices are low. So this is a factor that has always, of course, taken a slice out of the oil profit pie, but now it's taking the same proportional amount out of that pie, so it continues to reduce the revenues from oil exports. And now that we know what is cutting into the Russians' oil wealth, let's take a look at how the people in Hormuz lined their pockets thanks to Donald Trump. We have information here that came in for April, and it arrived in May. We don't have information for May, but we can more or less predict from the development of oil prices how it might turn out. And here, it's important to say one thing at the beginning. The Russians made the most money in April, so the numbers for May will probably be the best. They thought the numbers that came in May would probably be the best. After that, it won't be as good, because we can see there's a gradual decline here, so it won't be so optimistic for the Russian state treasury. At the same time, it's good to add that the Russian state budget regarding oil was designed with a plan for $60 per barrel, which was significantly exceeded, because since Donald Trump started it, the average price per barrel of Urals oil has been around $95. Yeah, the average price, of course, there are some spikes, there are some drops, but the average price is about $95 per barrel. Above all, the average price in April was about this. And that caused, compared to the plan, which was a surplus of 21 billion rubles, that right now the surplus is 175 billion, 5 billion rubles. 175 billion, that's a huge increase. And for June, or rather from May to June, it's expected that about 220 billion rubles will come in, which will again be significantly more than planned. If prices stayed as they are now, which we don't expect them to, but in the most optimistic possible scenario for the Russian Federation, not just possible but likely, in the most optimistic likely scenario, because you never know about any unexpected shock, positive or negative, right? But in the current world, with things as they are, the most optimistic expectation is that by the end of the year, there could be a monthly surplus of 200 billion rubles compared to the plan. That means the surplus could be about 1.4 trillion rubles for the whole year compared to the plan. 1.4 trillion rubles, that sounds great, that sounds excellent, right? But the problem is that the state budget plan isn't really working out well even now. Because if we look at the information we have directly from the Russian bank and Russian statistical offices, we know that right now the Russian state budget is already in a 2.5% deficit. Yeah, 2.5%. That means the deficit is about just under 6 trillion rubles. And it was planned to be 3.8 trillion rubles. However, of course, those significantly high oil prices were not included in that plan. And if we include that, we find that those significantly higher oil prices could slightly reduce the deficit, but they definitely won't reduce it enough for Russia to get back on track with its plan. Yeah. That means that even though they now have significantly higher revenues from the oil industry, when you combine that with the fact that some refineries are obviously destroyed, there are attacks on oil transport by the Ukrainians, the ruble is expensive, there are compensations for those refineries and so on. When you add all that together, along with what's happening with the war, those high oil prices only slightly ease the impact that has been caused and is being caused in the Russian economy. They only delay it a little. They only delay it. It's just a kind of reserve. It's like if you took out a loan to pay off another loan, it gives you some relief for a while, but then it piles up again. Or like if you got a special bonus while you still owe millions. Simply put, it's good, like it's great for the Russian budget. It definitely gives them time and room to maneuver, but it hasn't actually solved their problem. That problem still exists. It's just not as serious as it could have been. And even though Reuters reports that Russian oil and gas revenues in May rose year on year by 32% to $9.26 billion, the data shows that it means it increased by 32% year on year. That means that last year in May, Russia made less money, and this year it made 30% more. 32% more money than last year in May. Considering how much oil prices have increased, we can see there's a certain imbalance, and they should have actually earned significantly more, which they didn't. Besides that, there's the fact that even though in May they earned 32% more year on year, so compared to last May they earned 32% more, from the beginning of the year until now they've earned about 30% less. That means that year on year, specifically in May, they earned more, but for this year compared to last year, they earned a third less. They'll probably catch up, but considering how extremely weak the start of this year was, and that in reality oil prices will probably keep falling to some extent, it means they'll be earning less year on year. This year might actually not be that good, and it could easily end up in the negative if prices drop even more and if the situation in Hormuz calms down significantly, which, hey, lately we haven't heard much about it, and maybe that's also why oil prices are simply dropping. So look, if someone tells you that this oil crisis completely saved Russia, that's not true. But you can definitely agree that it pulled the biggest thorn out of their ass. But they've still got thorns in their heel, thigh, face, and balls. The thorns are still there, but the biggest problem was just taken care of, for now. But as we can see from the numbers, it's really nothing to brag about. When you add to that the small fact that 89 of the largest companies, which make up a third of Russia's GDP, have gotten into a situation where they probably won't be able to pay their debts, according to a report from the Russian Central Bank, we have news that 75 of the largest companies are at risk of default. Okay? 66 of them are in a difficult situation, and 9 of them are in a highly critical one. Those numbers might not mean much to you, but a year ago, about half as many companies in the area were in a difficult situation. So we can see that there is a certain increase, and we've already talked about the fact that in Russia, about 12% of all loans are non-performing or toxic, which indicates a banking crisis. In other words, the inability of these companies to repay is connected to the fact that the banks don't have money. So here we have banks collapsing, and big companies are also falling into significant debt. So even though at first glance this graph might look good, showing that they managed or were able to reduce inflation, that they went from 10% down to about 5%, which by the way is still quite a lot, the very fact that there are huge problems in the banking sector with repayments, and the fact that the state is getting into debt and there's no money, that's not such good news. Because inflation is also dropping simply because there's no money and the high interest rates are just crushing. I warned about this before. People were saying, oh, that's nothing because they don't understand what an interest rate means, and now here you have it, right? Besides that, of course, we have reports that the Russian GDP will be declining. Why will the Russian GDP be declining? Not because of the reasons why the European GDP is declining, which is simply low competitiveness and expensive energy and so on, but because they totally messed up and centralized their market, which basically ran mainly on war production, and that war production is starting to die because there's no one left to pay for it. And even though war production is still somehow increasing the GDP, the decline in the civilian economy is so brutal that the growth from war production is actually starting to be offset by this collapse, right? And when we look at other things, at other subtle nuances, like when you measure things like how quickly investments are made to rebuild Dagestan after the floods, or how much Russia is lit up and how much Russia shines from space based on, how much energy is consumed, how much is running, who can afford electricity, and for how long, you can see a pretty solid decline in all respects. Look, I probably don't really need to convince anyone here that Russia is economically screwed and heading straight for disaster. This was mainly about mapping out the situation. I'm not saying that Russia is collapsing. I'm not saying that Russia will just give up soon, or that they'll completely fall apart, or that they'll be begging. Putin will come to Prague with his hat in his hand, begging or something like that. That's not going to happen. Definitely not. I just wanted to map out the oil situation here, that it's not as great as was expected, that the state budget is actually in even worse shape, that oil can't really help them much, and that it's not just about the state budget, but also about the civil and private sectors, which are simply in a brutal crisis. So that's the situation. Ladies and gentlemen, let me know in the comments what you think about this. Support this content if you like it with a like, a share, or maybe through the QR code if you want to support this kind of work. And I'll see you again next time. Join the streams. I really enjoy talking with you there. And yeah, take care. See ya.